This is the Finance Committee meeting on March 8th. It's now 4:30 p.m. With us today are our General Manager, Mr. Kelly, and our bookkeeper, Melissa. Thank you for coming in. We'll start the meeting off with a pledge of allegiance. Would you please stand? I will lead us in that. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. Thank you. I did the roll call, so we'll skip through that. Any comments from the public? This is your chance. Anything that's not on the agenda? Oh, a little more informal. This is a committee meeting. No comments, no questions? Then we'll move on to the activity reports and the 6-month balance sheets.
Thank you. And just real quick, there's a couple of updates on the back stacked up there where Pam is right now. So since we sent out to you the items yesterday and to some other folks, Melissa was able to finish the other thing she was working on, so she could work on this. And so there's some changes. As you may have noticed, and it's mostly related to your list of accounts. They had a lot of, like in the revenue or for customer accounts, there were things like the filter plant repayment charge, state loan repayment, the WIN Act, and it had ag water sales first, and it had base rate charge in the middle. So a couple of things I wanted changed there, particularly related to what I call designated revenue. On the old budget, there's an item in there called non-operating revenue, whatever it is. So it's a really sort of, in my opinion, incorrect way to identify the additional charges. It's called other revenue. It's not really revenue. You can't operate on revenue that is designated to go into different accounts. So we have now been broken out by designated revenue. That's obviously those charges on people's bill. Now, one thing that has not been added in yet is the expense side. In other words, they're supposed to be in your operating budget, and you have designated revenue. It needs to have a designated expense, but the expense is really just a transfer to the different accounts for those particular items. So that's not identified here yet in the expense side of things. So on the revenue side, that was done. The other thing that was in your sheets that were set before you, there was in the revenue ordinary income side, there was a quote cost of goods sales, which had water purchase. I think it's something that Melissa can identify it, but I believe it's something that is sort of standard and is set up for QuickBooks. That is an incorrect attribution to the purchase of water. It is not the cost of goods sold. It is a portion of your cost of goods sold. The rest of the expenses down below, almost all of it, are your cost of goods sold. So we don't need a cost of goods sold. We just need the expenses to be properly identified. So that previous sheet that you had that had this cost of goods sold, it's actually now in the expense side, and it's at the top line of the expense, like the budget had before. So you've got your water purchase, your WIN Act, as well as the condo water purchase. And then you get into your water treatment plant list of accounts as you go down through the list, as well as the multiple pages that you have. There's a few items that I would just point out to you as it relates to that list as well. And it's probably more identifiable on both their activities, which, as you can see, the QuickBooks identifies it as a profit and loss statement. So we haven't really found it to any other like quote activity report, but we are able to get 6 months in a row, all on one sheet, so that would be helpful once we continue to clean it up. All the way at the end, I would just point out there's an interesting one called Other Expenses, and it's dash suspense,
I was
37,000.
gonna ask about that.
Right, and again, this one's still basically being figured out, but Melissa could probably explain it better, but it appears that when we had our contract bookkeeper coming in and basically just doing payables, she identified some payables that were done through the Bucks system in July. So in other words, that wasn't supposed to happen. They were supposed to have been everything was, converted over to QuickBooks July 1, but there were some that were done in July. And so she didn't have any other way to expense them correctly. So they're expensed in this weird old suspense account. So,
Do you have any idea what categories or line items this might have fallen? Not idea. Okay.
not yet. And that's, Melissa and I were just talking about this about 2 hours ago. That's kind of one of there's a long list of items that we're working on to clean all this stuff up. But that's one. So in other words, we got to go through each check and figure out of that 37,000,
Right.
did it really get expensed in this fiscal year? Is it somehow picked up for a previous fiscal year, which is possible, I would say, especially since it was a Bucks system July payment potentially. And whatever it is if it's written out to, PG&E, okay, good, then we go back and find that bill and figure out which expense line it goes to, or whatever it may have been written out. So I just wanted to point that one out to you at the end. The other thing I would just point out, and then we obviously are just open to lots of questions. My suggestion is we kind of dive right into the mid-year sort of budget review, which is this sheet, and the activity thing obviously just rolls out from that, or rolls into that, I'm sorry. So I'd like to suggest that we do that. But I guess I would just point out that because we haven't, back to the designated revenue, it's not really expensed out here. Your gross profit, or your kind of, I would say, total revenue, I'd love to be able to fix that if we could, is actually, 150, operating revenue is about $150,000 less than that, right? It's whatever that designated revenue is. So, if you kind of go bottom line, we have a net income or positive of, really $150,000 less than the $155,000 there. So it's $4,635.
Which was fairly accurate when we took a look at the general and merchant checking accounts from July 1 to December 31. It was $7,734.
Yeah, so it's
it balances
kind of
out.
around the area, yeah.
So by looking at those accounts, it gives us sort of a quick snapshot, and then this fills in all the blanks.
Yeah.
Okay,
So I think, and, really for the community, just, I added to your packet just this little sheet that has, as of 12/31, our balances for the different accounts.
Right.
Now, I don't have all the accounts on there. I mainly just have our general checking merchant, this little reserve account, and then those, quote, designated accounts that they're supposed to.
Right.
So-
I do appreciate the second version here. It's a little easier to read. It makes a little more sense. And it will probably cut out some of my questions. I'm not sure about Ficus, but, if we can.
Let's roll through it.
Yes, let's go ahead and roll.
Oh, and wait, one more thing. One of the questions, and again, Melissa's here to maybe help answer some questions on some particulars. But one of the little anomalies, and we're trying to get this to be as comparable as we possibly can to the old budget, recognizing the old budget is not the most descriptive version that we're operating, so we're going to make a lot of changes to that, and it's going to look more, I think, like this. But QuickBooks seems to do is, and I'll just use it as an example, water treatment plant, first thing you see as an expense is utilities. There's a bunch of them that are broken out there. And then there's this utilities other. Like, that apparently, and people not ready that is part of QuickBooks, they put that other. And a lot of it is because we haven't yet figured out, how to have 3,100 account utilities with the budget amount. So they put it in that bottom utilities as the budget.
So when we work on next fiscal year's budget, we're gonna follow more of this format then.
We're getting closer
Right, I'm just,
to that kind of.
we have some time yet.
Yeah.
That will give us some accuracy and some clarity when we're dealing with a mid-year budget.
And I just remember one other quick thing.
Sure.
Mr. Chair, you can start at the top and go right through. All the way back on our page 4, there's an account 6,000 called payroll expense, salary and wages. So in the old budget, there's each of the different departments have a labor cost. You might recall there's in treatment, there's labor standby, and transmission, distribution, labor standby, there's labor office, and then there's admin labor. We're not yet able to have that expense identified in the particular departments yet. We're kind of working on that, so what we're working on, and Melissa can let you just explain it more, is to be able to have this payroll expense salaries broken out and have underneath that treatment, distribution, conduit,
Right.
office, customer accounts, and admin.
And in the breakdown of the water treatment plant, we have some labor and O&M included in there, and will we be able to roll that over into another format so that we're not using it in calculations for what the water costs are per ACM? You know, it seems inappropriate to be putting a labor component and O&M into that particular chart.
Which chart?
The,
budget?
Mr. Paul Mason, no, Mr. Paul Mason's water rate chart that he used, that's the wrong one. Let me see if I got it right here in front of me.
I don't understand, you mean
Okay,
the cost of the water treatment shouldn't include
no,
labor?
I think we discussed this at the last meeting. Where did I put it?
Workshop, you mean?
No, yeah. Oh, here it is, right up there. Nope, unfortunately. It was one of these, and it's here somewhere, but it broke down the various things for the water treatment plant and the well, identifying cost of water, chemicals. We know at the treatment plant there were 3 or 4 different chemicals, at the well only one, but then there was labor, standby, overtime, O&M, and whatnot. And I thought maybe that the labor and any O&M ought to be in the base rate versus in a water rate.
You know, I think that's a decision that would need to be made at the time in which you do rate setting under the Prop 218. Probably there's always, you know, so what the base rate is the cost of getting water to your location. The per unit rate is the cost of the water treated, purchased, and delivered.
I understand. We had a question at one point whether that labor and O&M was actually already in the base rate or not, and I'm not sure we found an answer to that yet.
Well,
So I do think we need to.
could be part of that. I mean, that's kind of out of the subject.
Well, it's just added on to my comment about, you know, for clarity purposes.
Yeah.
But you're right, let's move on back. I'd like to go page by page on this,
That's
if
good.
we can. Do you have any questions on the first page?
Yeah.
Okay, so do I. Want to
So-
get started?
So here's my problem, when you get to me, if you start.
No, I want you to start.
Okay, I cannot take a look at this paperwork that you gave me tonight and be able to utilize it. It took me 2 hours to go through what you gave me yesterday, so all I can do is reference this,
Yeah.
and then maybe it's here, okay? So,
If you have something right off the bat, go ahead.
We have the old charts here if you want to.
yeah, I mean,
That's fine.
you know, I gotta sit down and really go over your new data. One of the first,
The data's not new.
No.
It's just reformatted.
Yes.
okay, reformatted data. So, I had a question in regards to income, right off the bat, base rate charges.
Yep.
And so the base rate charge is just a half a year, correct?
Correct.
So the 475, so it will actually should be more.
That's the actual collected.
Yes, that is correct.
The actual amount should have been 911,000 and change.
So our ag water sales, what did we base our ag water sales on since we did not get any water from the Bureau?
So when the accounts clerk enters in all of the accounts receivable, the different accounts are billed out and they already are, have ag water or domestic. And I don't know which ones are which, but some of them are set up that way. And so when they come in, it automatically goes to that ag water, whether, we are designated or given ag water or not during the year. Their payments will go to it.
Okay, and then what were the water out of district sales?
I actually don't know. I mean, it's a small amount
think I do.
from what I'm seeing, but my guess would be that it's something similar, that there's something set up somewhere on someone's account for out of district, but that's just a guess.
There is a chance that it went to Western Industries, who ran conduit for internet. And they did contract with the district to do some water jet. They paid a monthly fee, about $100 as a base rate, and then more per HCF than the customers were paying. And that was to enable them to install all the conduit throughout the community.
So these were,
So there's a good chance that's what it is.
it was $44 in July and $50 in August.
Okay.
Okay.
It's very small amounts.
Well,
They didn't pay monthly either.
yeah, well, let's see what that is. But
Yeah.
I don't think that's coming from any accounts receivable from products, right?
So my next question was, is with Centerville water sales, if the budget was $95,000 for the whole year, we've already collected $84,000.
No, it's 6 million.
Just maybe it's a good reminder, I should have mentioned it. The budget column, that is the
6 months?
So that is
They're actually
This-
190
Oh,
annually.
okay.
this cut in half.
Yes.
So then,
And we could not figure out a way to get that title up on the top.
so then, all right, then let's go back then to the base rate charge. So our budget is supposed to be $773,000 income,
Yes.
and we've only brought in $475.
There's 2 months that didn't get split out of the water sales that I'm still looking to do.
Okay.
Okay, I think that was on, yeah, one of these that shows a zero.
I want to touch on that just a little bit, because I did the percentages on that, and that 773 was based on collecting 85% of the base rate. And since it's well below that, it's actually collected would be 51.2%. So if we
That's
have-
all we're collecting?
No, she's saying that 2 months of it never got in. So we can figure that if that's 4 months, there's another 200,000 that belongs in there, approximately.
It will get split out from the water sales number, because it got put into the water sales number.
Right.
and those-
I understand.
Okay.
I have a follow-up question. Having looked at some of the paperwork from LAFCO with their MSR, they're showing 2,356 meters, yet we always use 2,710. So are we giving them insufficient information, or are we as a board looking at it incorrectly? Because all of my calculations are based on 2,710 meters, active.
I think that's because that's what's in your rate study that you just pointed out.
Yeah.
You were looking at. My understanding is the 2710, that is the total number of basically dwelling units.
Active meters?
No. There are many meters that have multiple dwelling units behind them. In other words, I just took a customer call today complaining bitterly that she's paying $170 a month because she has one meter and 3 dwellings, so she's paying 356.05.
Yep.
Plus her water usage. It appears to me that that is the policy of this district. If we want to change it, we have to go through a 218 hearing. But that is the current policy of the district. You can look at our rate sheet. It says per dwelling is what you pay your base rate cost.
So that's where the 27 comes up.
So
Well, all our
my
mobile
understanding is that's where the 2710 comes from
Because that's how we're
Versus-
supposed to be collecting from.
versus when I'm asked by LAFCO for the number of connection meters, that is your connection meter. So
Fair enough.
I know it's,
I'm one of those.
I'm not
I
excited
have one
about it.
meter in 2 homes, and I pay the base plus the 1091 twice every month. Now, there are a dozen or more customers who are not paying that. I have talked to a few of them. Gentleman who was here at our last meeting and sat there had the issue with penalties and whatnot, and he purchased a place that had been closed since the late 1990s, so it had 0 allocation. Well, he's got his trucking company, a cement company, and somebody else on there. So I told him to come to the office, explain the situation. You'll get 3 base rates and everything, but then you can go and track the charges and make your tenants pay the difference. And he kind of liked that. I don't know if he's come in or not.
I don't know. That would be something we would have to ask. And again, that was the conversation I had with one of our customers today. He was very upset about it, but it was also because she has 3 rentals. And, I just said, I don't think this policy is going to change within this next couple of years, so you might want to make sure that if you want to pay your tenants water, that's your decision. If you want to pay their base rate, that's also your decision, but
Correct.
my suggestion is you may want to collect them at least the base rate if you want to cover the water cost. That's up to you.
I understand that. Now, I don't want to get sidetracked. At another time, we'll talk about when the 1 meter, 2, 3, whatever homes was instituted, because the time frame was prior to the Prop 218 being instituted, and the legal definition of it, or the legal aspect was that each district, if they enacted something like this policy, within the year prior to Prop 218, they had to run a Prop 218 to make it legal. I'm not sure our district.
They did it in the 80s. They did it in the 80s.
Okay, so it may be just fine.
Yeah.
Some of the research I did had it in question, but let's move on. I want to continue with filter plant and backwash and whatnot. I was doing my math on that, and it seems that some of our percentages seem odd.
What page are you on?
I'm doing the comparison also from the account balance.
Just tell me where you're at.
Okay, some of it I ran off of the account balances, and I was looking at doing the percentages, and I noticed that on the state loan and the WIN Act, it appears we collected 83% of the revenues, that about 17% went uncollected. But by doing the same math for the backwash and the filtration plant, they both sat at 67%. So I was wondering if there was some anomaly in the software or something did get put into those categories that accounted for that much drop, 16% drop in those revenues?
So you're still talking about the designated revenue area?
Yes, the designated revenue ones. Yeah, I would think that the percentages would be the same for all four of those categories.
Right.
And I noticed
So from my understanding, the contracted bookkeeper was given the billing journal and not an AR journal to work from in doing the accounts receivable. So when she was putting in the accounts receivable monthly while doing the reconciliations, she was semi-guessing at the numbers going off of the billing journal because that was what was
Right.
billed and not what was received.
that's kind of what I expected. And I think because of those anomalies that go forward, I'd like to see another 6 months at the end of the fiscal year and then combine the two for the end of the year so that we can compare the first 6 months and the last 6 months and see how things kind of wash out finally, where the corrections actually happen or whether we still have issues or not.
Well, I think too, as Melissa goes through those AR journals and reconciles them, these numbers may well get more balanced out
I understand that.
versus the conjecturing that was going on.
There was a lot of that.
And
All right, why don't we go ahead and move on? Oh, I do like under cost of goods sold, the changes you've made to the latest version. It's a lot clearer, it makes a lot more sense. I really appreciate that.
well, there's a couple things, yes, because, top line expense for any business is your material costs. So in this case, for us, it's the water purchase. And so that's why we have that first. So it's, right now it's titled supply cost, we can make some changes to it. But it's your,
It turned out rather confusing. You go to cost of goods on the original one and find that 222,250 repeated line after line after line. And then to see a gross profit of 1,292,000 and going, where did they come up with that?
yeah, but
Then
as
get
you can
some kind of
see,
here and-
it still needs to be rectified.
Oh,
Because we
yes.
have 2905 that says water purchase. And then we have USBR purchase with nothing. And then you've got WINAC repayment, which doesn't qualify as a water purchase. That needs to be under the supply cost.
Yeah,
And
Thank
the
you.
McConnell water purchase needs to be part of the water purchase.
yes, yes.
And then there's another line that'll be in there, that'll be water purchase other, which will be showing, eventually will show up that we purchased water and river from the city of Shasta Lake.
Exactly. And
So-
I was looking at that and going, oh, I gotta remember, this is the water we paid for up through December 31st. We still had McConnell water in January, February, so that's why it didn't come up to the full 287,000 or whatever. So that makes sense. So that, the clarity in this one becomes much better. You're up next.
Okay, so just total income, if we just look at our total income or gross profit, we're down about 200,000 where we should be. So I'm just kind of looking at where we're supposed to be,
I think
what we
it-
budgeted for, and what we thought we were gonna have.
But
And it's gonna show up in expenses later, I'm pretty sure.
So then with the WIN Act repayment, which is a fee, or we're paying for the CBP project water, I came across something in 2018, and I've got copies here for you, so I would like you to do a little bit of research for me. Because it says this repayment is, we are repaying the rest of the contract, the CBP water for the rest of the contract. And so theoretically, 2020, that would be 10 years worth, because I think our contract comes up in 2030, something like that. So it's like 10 years worth of prepayment of that fee. But my question is what is it based on? How much water is it based on? Is it based on 15,300 that they're calculating that CVP repayment based on? And it said what current costs were. So if our CVP rate was $20, that's what it's based on, even though it might be 12 now. And it said only ag and not M&I, but I think it is both, but I don't know. So that's why I made copies of that portion that I found, and I would like you to try to research so that we have a better understanding of that WIN Act repayment. Because if it is 10 years, granted, okay, and this is how they calculated it out, the 225, is it, when we got no water last year, none, and very little in 2021, what were we paying on? Were we paying during that year when we received nothing? And that's not right. For them to calculate for that given year that maybe we paid $10,000 or $50,000 when we got no benefit out of it. I just think that year ought to be taken off. Anyways,
Well,
I've got,
the other thing is they might owe us a credit then, for
so,
that money if we've overpaid, which they have found in the past that we had overpaid by just over 200,000.
it was just, I finally found something that explained a little bit about this whole Win Act malarkey stuff and what it was. And I just thought, okay, we need to investigate it a little bit further so we have a full understanding of what these charges are and how they came about, their calculations. So there are some unanswered questions.
Well, there are some reconciliation, but in broad sense, because I don't really know what you're speaking to, but the, kind of like building a house, the federal government built infrastructure that is basically the Central Valley Project. We received 15,300 under contract acre-feet of water. That's the capacity of that constructed project provides for us. And so, whatever that costs $100 million, divided by the total number of acre-feet that are being done, and it's a per acre-foot size. So our 15,300 is that portion that we're paying for. Well, let's just say it's $10 million out of whatever the project is. The WIN Act was a federal government, so we're going to pay it until whatever, however number of years, right? The WIN Act says we're refinancing it, and they're going to pay it all off in a lump sum, and then the district would be obligated to pay off that refinance in a short amount of time. And what we get is the permanence of the 15,300, regardless of a delivery year.
Right, but is it, we only have to pay that CDP based on what water we use.
Yep.
No, on the potential of the capacity.
When we get our bill from the Bureau, that CVP is based on, right now, 1202 or 1204 for ag water, and 2404 for M&I. And the monthly charges that I saw, one that the district had, it was based on how much water we used, not the total 15.3. So anyways, another time.
It is another topic,
Yeah.
and to be very honest with you, this is something that needs part of the whole WIN Act thing. WIN Act needs to be paid. I'm waiting with bated breath because the Bureau allegedly had a big meeting on Friday on our particular issue that they're supposed to let us know on. So this really needs to be a conversation with all the board, all the community listening. And so, again, now, I'm going to put myself in the Bureau side of things and say, here is the Clear Creek obligation for their 15,300. This is, I'm going to just use a round big number and say $10 million. And over 30 years, it's going to be let's say $10 per acre foot per year. Well, one year they might be giving us, 3,000 acre feet. So we paid $30,000 for this thing that we should have been paying $150,000 on. So that obligation is getting added on and added on. And so that's why,
Okay.
conjecture, that's my understanding of why many districts decided, hey, let's take advantage of this
we have to look at. Okay, I am done with page 1.
I am too, let me double check. Oh, one question, property tax should have been on page 1 still, isn't it?
Yes, it should be.
Okay,
and
so
that's
it should be
another
about
revenue.
340,000 a year.
That's what we
Can
have.
you give me some general idea of what months, because they only put it in twice a year. And I see that according to the actuals, we didn't receive 170,000 yet.
We received, I believe it was in January.
Right, it should be 2 months of the year though, I think there's 2
Yeah,
payments.
there's 2 times.
Okay, so do you know what the other one is? Okay, so they may be late on a payment to us, considering.
I'm thinking it was like something like May, so,
Or you think January, May,
yeah.
not together?
Well, because the taxes are due in December and April,
Right.
so I'm thinking, I saw it somewhere, but I cannot.
Okay, and that's possible.
Yeah.
It could fall all early in, we may have missed it in this.
Just real quick, yes, and so we'll check on that. Taxes are due before December 10th and April 10th. That's just when the penalties kick in if you don't pay.
Yes.
So most of us pay on, December 9th and April 9th.
I bring this up because one year, the state did fail to pay us one of those payments. And it came in much later when people researched.
It wouldn't be the state, it would be this county.
County.
Well, okay.
Yeah, we'll find out. I'm pretty sure we received the January payment and hopefully we'll be receiving the May payment.
Good. Thank you. Then we can move on.
Yep.
Okay, well, on page 2, the question I have, and this is the old one, it has to look at when you look at safety, or the maintenance at the plant, the water, I would assume that's water plant.
Give me a
Uh,
line item.
30,200.
Okay,
Okay.
Water treatment terminals
Yeah.
on it.
So if we take a look just down, of course, we know the chemicals went sky high on us. My question is the vehicle maintenance and expense. So, I see we've got the fuel expense here, and this is so that we can charge Centerville, correct? A percentage then of, is that why this expense is broke out on the plant?
That is my understanding.
Okay, so then, my question is insurance. The insurance, when you look further down, it's all charged to JPIA for $35,000 or $32,000. Is that vehicle then in the JPIA insurance charge and should be added here so that we can give a certain percentage to Centerville of that insurance on the vehicles?
Yes.
Okay.
It has never been done. We're doing, we're really diving into a much more granular element to our expenses for this district. And yes, as a matter of fact, one of the early reports had too many vehicles in here because some of them didn't apply, so we removed those. And yet there are some vehicles that need to be in treatment because on occasion they go from here up there and we need somebody to go up there. And that should be part of the expense that's passed on to Centerville as well.
So we're coming.
But it's a good point. There are, and again, the old budget, had its own section on regulatory billing. Well, that should be an admin and eventually should also be attributed.
Yes.
Because there's a few things that we pay regulatory-wise that is a treatment expense.
Yeah,
That should be attributed to treatment. We just haven't quite got to that
okay.
granular level.
Work in progress, I appreciate it. If my understanding is correct, we are behind on a reconciliation with Centerville, are we not?
Yeah.
Okay, so that's another thing that'll be caught up on.
Yeah, well, so maybe for the finance committee, we're still trying to learn this thing, but, every month we send Centerville a bill, and it been about $190,000 for the last number of years.
Quite a few.
Even the reconciliation really doesn't make a significant change to it. But
Okay,
in our contract, the reconciliation is done with audited financials.
yes.
So since the district, us, we've been behind on our audited financials. So now that we've got FY21 audited, we've given that to Centerville, they're starting to go through the process of doing it, and then we're gonna meet to figure out how to reconcile that. And, you know, the auditors are working on FY22, and the minute we were done reconciling FY21, we're gonna hand them FY22 and say, look, we're gonna get caught up.
Yeah, that's good. If my understanding is correct, some of the O and M out there is not included in that contract with Centerville.
Yeah, and again, this is off subject, but
Okay, yeah. We'll just do
it does impact the budget at some point.
Yeah.
You know, as I will report to the board, the Centerville contract, is up in 2025, and it's time to start dealing with that. And, you know, there's some dissatisfaction on both parties on how that's attributed and used.
We'll deal with that.
Really
another
back
time.
to Director Fitz's question, yes, there are some expenses in this vehicle thing that have not been teased away from the gross expense that's on the other side.
So I was concerned about let's see, what number are we at? 4,300. I was just concerned, or 4,310. What personal safety equipment did we purchase for $3,900? We purchased, it looked like so far, $4,000.
That's the uniform, cleaning and everything that we do from Aramark, so.
Yeah, that's the pants and that.
Wait a minute.
Well, there's also.
Yeah, safety equipment listed there.
You're telling me $4,000 to wash pants?
Yep, that's the maintenance and washing and keep up the pants that Aramark does.
Yes.
Okay, so please put that on your list to check with Laundry World or somebody else. That is a ridiculous cost. Just. I didn't think the cost was that high.
So
Okay.
$70 to $75 a week.
Yes.
Are we washing that many pairs of pants a week? I'm just curious.
Yeah, it's like 4 or 5 per person.
It's just a sore subject for all of us, you know, but it's,
My understanding from what I've heard from the guys in the field is that that red clay that we have out here gets into the uniforms when they're doing the work. And we used to have, I guess, washer and dryers, and they went through several sets of washer and dryers because of that clay, and that's why we went to uniform service.
we just need to look at alternatives. So-
Well, as I've reported to the board, this as well as others, definitely looking to see if we can bid them out or get some proposals from others, number one. And number two, I'm pretty sure there's another couple of expenses that are in there that are not just the uniform, because uniform, I believe I calculated back when we were doing the MOU, was more like $3,500 to $800 a year, not for 6 months. But
Well, if you do 300 a month, you're looking at 3,600, so.
For the year, so it'd be 1,800.
Yeah, but this was
One and a half years.
this is just 6 months.
Yeah.
worth. So then the other thing is the repair and maintenance, at 4,400. It's showing, repair and maintenance, O&M, 129,000. I'm just curious as to what that was. And then did the board approve these additional expenses?
You talked about item 4,400
Mm-hmm.
at 124, 435.
I got 129, 199.
I'm showing 124, 435. And over here,
I don't know if you have these wrong.
Okay.
yeah, that's the old one there.
Yeah.
He told me the figures were all the same, put in a different order.
I know, but this is, this is under.
I'm grumpy today, I am, I have to apologize, I'm grumpy for whatever reason. Sorry, guys. Or whatever.
Yeah, definitely the O and M slash materials was budgeted for $85,000 in this, and I think there's some other maintenance things that are not quite picked up in this, so that's why it's the 42.
And this is just,
I reviewed this the other day. I asked Melissa to be prepared to show us what that 124 is, but she may not have gotten that printed out.
I
No.
did not, for whatever reason, I thought that.
I remember reading invoices before signing checks, and I know we used up certain pipes and some valves, and then had to go out and repurchase them to get a backstop.
And see,
That
this
could account for some of that.
it is. For example, I think it was the early November, late October break that had a big line. It was like one of our large ones, like a 32-inch line, or whichever one. But there was also the one on Melinda, which is 16.
And wasn't Axner brought in
Yeah.
on both of
Most
those?
of those, and so some of this increased cost is that. Some of it is we used the last of our materials, like a remnant piece of pipe, whatever it was, to fix a couple of those. And back in November, with supply chain issues and everything else, it was like, yeah, we better order it now because they're saying it's gonna take 6 months, and it was very expensive. So there's been no, to your other question, again, we'll have to supply you with a breakout of all of the expenses that have gone to that, and there may be some that need to be attributed elsewhere.
Should be in the activity reports.
But the other thing is, this district hasn't had a mid-year budget review or anything like that, so there's been no
So,
board-approved
but
changes.
if we purchase things and we know that, you looking at it, know that we're over budget, should that not be coming to the board to approve? Should the board not say, even though we have no money for it, or it's not in the budget, not necessarily a mid-year, let's say it's in November, let's say it's October, let's say it's December, whenever it occurs, that we know we're gonna go over our expenditures of what we budgeted for, aren't we supposed to be approving those those overages?
I don't believe I've seen anything as a board policy to do that. I think you should have that conversation next week when we have this conversation. And the second thing is, last week's the first time I've seen that we've actually had a system good enough to print out the fact that we've run.
We've got numbers.
So,
Yes, we have
so
some.
I'm extremely concerned about it. Based on this, though, I was able, because I've been holding off on a few expenditures, authorize the installation of this valve, because one of the costs in here is a valve that we purchased to put on that Melinda section that's going to happen tomorrow, hopefully, so that whenever we have leaks out there, we don't have to shut down that dang system.
Yeah.
Isolation valves.
So, Director Pickus, I think, it's a good point, it's part of our conversation next week, I think, when we look at it as a full board,
Okay,
because there hasn't been a policy, and part of the thing is too, not only are we just now seeing this, right? But how in the heck were anybody able to compare this to anything, and all those terrible activity reports that we've had for the last 2
yeah,
years?
that's it.
So, I think we're gonna have a little bit better real time.
Okay,
I'd like to back up just a little bit to 3600, the filter plant. On the old one, we have a whole bunch of zeros for budget,
Okay.
zeros actual, but then we have totals down there.
We got rid of those because,
I'm just curious.
yes, on the, when Melissa was putting together this item, on this last page, there was a list of capital improvements.
Right.
They're not really part of the operating budget,
Correct.
so.
And in fact, most of those weren't even in the budget. They were just improvements So because we had totals for the filter plant of 114,000 and supposed actual expenses of 87,900, but no line items to show where the money went, and that I was curious about what had happened there. All right, I'm fine with that.
Oh, which vehicle is broken?
Yes, thank you.
Which one is here? I'm not sure, you know which unit it is that has the engine that's broken.
Do we know
Oh,
what-
tie rod? I thought it was a tie rod or something.
Yeah, well, it's been, it needs a new engine. It's been Roger's vehicle, it's in the parts in the back. But I can't remember which unit number it is.
Okay.
Just curious, because the numbers here, those are saying what year the vehicles are. So none of our vehicles are older than 2015. I mean, the dump truck is 2012, but those are the years of the vehicle.
As far as I know.
Okay. Do we know how many miles are on that vehicle?
Oh, the one that needs.
Broke down.
Engine? Yes, it's somewhere around 128,000 miles, something like that.
That's not bad.
It appears there's a one missing in here, and that is the Ranger, the Ford Ranger. I don't see it in there, it should be in there. That one's definitely older than 2015.
So, did we get to the insurance yet?
No.
GPIA? Okay, all right, okay. I
We'll get
wasn't sure where we are. Okay.
Moving on then, with our CAC safety. What do we got? Repair and maintenance, backflow devices, whatnot. There was a pretty big discrepancy there too. Let's see, what were those? 4,400. That's all on the bottom of this page.
Well, I guess on page 3, one of the ones that I would just like to point out, which is concerning to me, and I haven't been able to figure out what was intended in the old budget, but under utilities, I wouldn't consider waste management to be considered utility. That should be under building maintenance.
Yes.
But again, I don't know, we probably need to figure out where we have building maintenance.
What number are you looking at?
5,000, 5,015 on page 3.
Okay.
There's down here, 50535 is building and ground maintenance office. If you want that waste management put with that, I can make this up account.
Well, I don't know, I mean, propane could be considered utilities, obviously, but I don't know, I'm not sure where it's supposed to go. And then I would just point out, the telephone TES, we are in discussions with them to potentially provide some, our internet is not fastest with wireless, which is fine, but, we thought maybe we might want to see if we can get TDS to provide us with some internet. But their phone service is pretty poor.
You don't want you don't want internet with TDS.
Depends on where you are. I have it, but it's great. But I'm close to the office.
Well, I'm hoping that they put fiber close enough to be able to get it here.
Well, that's what that conduit, that
Yeah.
Western Industries.
So we're talking to them, they claim that fiber might be available for us by the end of the year.
I think they can only provide like 3 or 2. Compare what we currently have. I don't know which rate you're paying, but you can pay a $50 one, a $75 one, and then one that's even higher. And I think the $75 one is 5 to 8. I'm not a
Yeah,
computer person.
we're at the highest here.
Yeah.
We have an agreement that has just expired that we need to renegotiate with Compare, in which they have a tower on our booster station to serve a few of their customers, and in exchange expense for telephone, I think. And, you know, again, it appears that the previous budget only budgeted 15,000 for the year for the admin utilities, which is apparently not very accurate.
Obviously.
Just wanted to point it out, same thing as office supplies. And then, and I think something, Melissa maybe speak to this, but the insurance, which is 50400, this was also identified in our budget as property and liability, basically, which really included all auto and property liability and cyber. And the budget was $42,350. Obviously, this is a little bit higher than that, but that's, for some reason, the budget just had all of that one amount, and it needs to be broken
I
out.
did have a question about the line item 5420, the vehicle insurance. That seemed rather high.
Is that 6 months, or is that for the whole year?
Whole year,
Okay.
So the 35,000 is a whole year's
whole
worth.
year, yeah.
Okay, so if we divided that, we
I counted 7 vehicles, but you added a number 8, but that still is based about $450 or $400 per vehicle.
Per month.
That's high.
It is.
And I realize we have to have a high policy, probably $1 million or $2 million. But again, that would be something that I would ask you to please investigate, because that's ridiculously high. That,
Do you know what the limits on liability are on that? 1 or 2 million or something? We have to protect the assets of the district and the customers, I know.
Yeah, I don't, but it's a lot more than the traditional, like 1 million, whatever.
Yeah.
Right,
1 and 2,
right.
it's probably 5 and 10 at least, something
It
like that.
could be.
So, yeah, we will definitely check on that.
Legal, the audit services, no, nothing was paid then in that 6-month period?
Yeah, you know, they didn't actually submit their bill for the FY21 until January.
All right,
so it'll be there.
that's fine. So we'll pick it up the next time. And it ran more than the, well, actually, did we budget 20? And that $9,999.98.
Rounding.
Rounding. I think the budget was actually 20,000.
Yeah.
I found it interesting, we still had that issue with some odd pennies here. and
I don't
there.
think it was 20, I don't recall it being that high, but 15
Yeah, for
maybe.
some reason, I don't recall that either, but you know,
Yeah.
it was 20.
Yeah.
obviously.
Yeah, because we knew we were gonna be doing more in-depth audit, because both the board and the community wanted that expense to make
Yeah,
sure.
and I think as I reported to, and they spent a lot more time on that
Oh,
FY21 than
yeah.
I thought, but they gave us credit for realizing it's on it.
Okay. 5705, water fee, other. Just wanted to know what that was.
Oh, well, you're on the next page, okay. SWRCD,
Yeah, we want to see other.
City of Reading Finance Division, EAGSA annual report share. Was 7,000 of the water fee other.
So that should have been under the GSA.
right, now, according to my information from the GSA, we should be getting that back. They're supposedly working on some grants. There may have been a few small other bills we might have to pay, but supposedly we'll be getting all that back, hopefully by the end of the year.
Yeah, but I believe that would be really under the GSA.
Yeah, it should be under GSA.
The line item above that.
that one. So the other fee though, the 5710, that 18,005,
That's the state water board fees. There's 17,000 of that is dues. The other two, I'm not sure.
I'd like to stay with that state water board. Is that, and do you know, is that on our well water, or was that just a district fee? Because you're looking at $37,000 annually then.
No, that's an annual fee.
That's an
You're talking about the 18,512.
Yes.
Yeah, that is an annual fee, and it is, the state water boards, small community, water fee, and it's a per connection fee that they charge for administering their programs. And we, the district, is obligated to pay for that, and it had it included in their budget under organizational dues, Aqua and AWWA. So the State Water Resources Control Board is not an organization, it's a state agency.
Right.
And as Director Fuss mentioned back in, I think it was at the December meeting when this showed up as a payment. He wanted us to register our deep concerns about this because they just wantonly up the per unit fees. Because, our costs are up, we're going to charge you more. I believe the fee paid by the district was somewhere around 12,000 or 13,000 last year.
Now it's up to 18.
Well, yeah, maybe it was more like 14,000, but it
That's
was
a big
at
jump.
least 3,000 or 4,000.
So I would like to ask again for a list of all of these regulatory fees that we have and the amounts that we pay. And I granted, I realize they may change yearly, but I would like to see a list.
Yes, and I think we actually had a list, and probably forgot to give it to you, which was the organizational, the dues list. We did get that list, and we were going to send that to you, and then, but that's different than the regulatory fees.
Right.
And again, I think one of the things that's really challenging, which is why it's good that we're doing this on a more granular basis, I'll use that term again, I don't know why I tell that, there's the fact that the old budget had a state agency fee under dues is just kind of weird to me, and it just shouldn't be that way. It's not necessarily regulatory, but it is a state agency fee. Where obviously members of the Association of California Water Agencies,
Right.
the Association of Water Works Agencies, AWWA, that's different, that's a dues.
So obviously this is billed once a year and we just pay it, that 18,000 plus.
Yes, if we want to continue to be it.
Well, no, I understand
Yeah,
that.
we
It's just
unfortunately.
that, this and maybe one or two other things are the only ones that are paid annually, and they're hidden here, and it makes it look like that particular regulatory fee, we overspent when we actually didn't.
Right, no, it's a good point. And again, I don't know what we can do with QuickBooks, but that's why I kind of wanted the title to be, half your budget.
Yeah.
It would, that way you can at least know for sure, well, but it's hard to know which one of these unless you go through them.
Right.
Is one, like insurance, right? I mean,
Right.
we just decided, hey, we're gonna save money by paying it all now. I mean, not a lot of money, but you can save a little bit.
Without trying to create more work for you, maybe at the end of this, a page that identifies by the item, things like this was an annual fee or whatever, so that it's more transparent for the whole board and the community.
Yeah.
Okay,
Figure that out, maybe we figure out how to put an asterisk by it. So.
yeah, something, a little note at the bottom.
I'm at 5,100 and 700, but if you got something before that, let me know.
51.7.
Mhm.
Yes.
Property taxes, so what do we pay,
Yes.
what do we pay property taxes on?
So that is our
piece of machinery that is for your business, if you're a sheet metal person or whatever else you're doing up and down, you are paying for property tax for machinery. And are charged, since they're a private company, by the county property tax, and they're passing that on to us.
Yeah.
So it's not really property taxes in the sense of county property taxes?
No,
No,
but it's not inventory
it's
tax
personal
either.
property tax.
So it's really, it's equipment expense is what
It
it
is an
really is.
equipment expense, but it's identified on their bill. One of the line items is a property tax, and so that's why it shows up here. Now, we do pay another property tax item, which I'm disputed, but I was told too bad. And that is that we pay, I think it's $51 a year for the mosquito abatement district's fee on our property. Because we have property in their district and they're out here spraying, taking care of mosquitoes. And so every property owner, including a municipality like us or a government agency, is paying their fee.
We have several properties, so do we pay on each one of those? I think, don't we have like 5 parcels or something?
Yeah, we have
like that?
5. I believe it's like maybe 2 of them that we pay on.
Yeah, I believe it was, 2 that they listed on the mosquito, the Shasta Mosquito and Vector Control District is what it's called, and this one 5750.
So that's the general tax expense, that's the mosquito abatement. Why, not that I want us to be, but why wouldn't they charge us for every piece of property we own? No improvements, maybe they don't charge you for your tax?
And that's the only thing that I can think of is that because there's, like here, we got a building on it, and I guess they figure there's people here, so therefore they're gonna charge us. I don't really know for sure. All I told them was, hey, we should be exempt from this. And they're like, no, we didn't read the bill. I said, okay, well, I'm not gonna tell them that we have other properties that we are being charged on.
Yeah, correct. So what is your year-end projections? Here we have 6 months, and we've got January to June. You're showing us a net income of 310, but that net income also includes the 112,000 penalties, right? Does it include any of the reserves in there also that we're not supposed to touch?
No.
So it's really about 200,000 then without the penalty money? So where do you see us, because I noticed that, some fees didn't hit in this last 6 months and will hit this 6 months, like the bill for the audit. So where are you seeing us in the next 6 months with our?
Yeah. So from what I can conjecture, we are going to be in the black the next 6 months. So there's a couple things. One, the $340,000 worth of property tax, give or take, has not hit as revenue, and that's pretty doggone key. Again, we've had a few expenses like insurance and other things that we paid all of those. We have some impending expenses like our payments to for our WIN Act that will hit. And then I think just when you look at, we've had our lowest amount of water sales January, February, probably into March, you're going to see that obviously start ramping.
Right.
So based on that, and then we'll just mention, I think our net is really less than that 200. It's more like 600,000.
Right.
Positive. So, again, balancing all those out, we're going to be pretty well with that. Plus, we've had, staff changes, and so we kind of balance out what comes and goes of those. The period of time in which we had no staff in certain positions.
Except that's mitigated by your salary, which was on in part of the first 6 months.
Yeah.
So that kind of almost is a wash. One, are you about done?
Yeah, I'm done.
just about done. I wanted to cover total employee benefits. They aren't quite matching up. Organizational dues, administration general, I guess, 50,000.
What line item?
Yeah, 50,300 on down to total benefits, which was 55,893. I noticed on the first one, it was off by quite a bit at 25,007, the first one that was sent out. And I did some calculating and it was 51,880. Now we're coming out at 55,893. So were there some items that were incorrectly coded, maybe brought back in?
Correct.
And then showing the budget was $149,029, and in the original one it was $168,300. So
What line are you on?
line 51,400. Looking at the two, the old one and the one we got today.
So there is an issue with having these expenses here, and then the rest of them are from payroll.
Right.
Because payroll, all of those go directly into liabilities and not expenses, and so they don't show here.
Okay.
So some of those that you calculated for the budget and expenses are actually in the liabilities.
All right.
There's also one other issue with our budget line that I wanted to make you aware of. Is because I didn't have any frame of reference of what we spent per month, I took the budget and did an equal split every month. And so there may be some months where, like in the revenue, we take in a little less, and then other months where we take in more during the year, depending on, water usage and things. The budget is not going to reflect those ups and downs, it's going to be static on every single line
Okay.
for each month. Hopefully next year we'll be able to better gauge like which months have more expenditures, revenue, and things like that. But for this one, it's all
November,
static.
December, January revenues are always depressed. They're very little water sales. So you're looking at day 3, whatever, basically to run everything. We're running up time-wise.
I know we are.
We have item C on the old and new business, and I think we may have to table that. The water shortage, unless our director has comments
Well, we could have that conversation
during the,
at our next meeting.
I think
Okay.
so too.
Because it's on there, at least the draft.
Yes. Any comments, questions from the public before I close the meeting? Go ahead, come on up.
I agree with
For the recording station, please.
Pam Beaver.
Thank you.
As we look into the laundry expenses, can we limit the guys to 3 pair of pants a week? And to be honest with you, I know any kid or any man, sorry, but if they get their pants in, they're gonna just drop them and say they'll get washed anyway. I mean, even if they're not dirty, the fact is that's an expense that we need to look at. And I think that the clay, that the guy's saying the clay soil is really hard, well, we all wash in clay soil.
Yeah, you have a valid point. And also, without knowing how often are they actually down in the mud?
Yes.
Yeah, versus just.
Their MOU is very clear, they get paid for that, so
Yes,
we
it is.
cannot take that away from them at this
No.
point. We can search for a cheaper way, as far as I can tell.
Okay,
But I agree that maybe they can be asked to try to look at which ones are really dirty, if they can.
To minimize it. Sure. Any other questions? Then I'm going to bring this meeting to a close.
Does anybody know what to do with Caitlin's recording? John, can you go turn it off? And then we'll have to restart it.